And staying in the U.S., the head of the U.S. Federal Reserve has once again indicated that a rate hike could be on the horizon. In her final public speech ahead of a Fed meeting next week, Janet Yellen said if incoming data remains consistent with their objectives, further rate hikes would be appropriate. Kim Min-ji has more on that.
Could a U.S. rate hike be in the works? Speaking at the World Affairs Council in Philadelphia, Fed Chair Janet Yellen said positive forces supporting employment growth and higher inflation will continue to outweigh the negative ones.
If incoming data are consistent with labor market conditions strengthening and inflation making progress toward our 2% objective, as I expect, further gradual increases in the federal funds rate are likely to be appropriate and most conducive to meeting and maintaining those objectives.
Yellen admitted May job figures were disappointing, but said it would be wrong to put too much significance on a single report. She also noted the uncertainties facing the U.S. economy, such as slower demand and productivity, as well as inflation, which could change the Fed's course of action. On top of that, she said Britain voting to leave the European Union would have significant economic repercussions.
So an important question is whether the U.S. economy could continue to make progress amid fairly considerable global bumpiness. I continue to think that the answer to that question is yes, but the weak investment performance in recent months is concerning, and Friday's employment report provides another reminder that the question is still relevant.
Yellen's remarks come ahead of a two-day Fed meeting scheduled to start next Tuesday. However, she did not give an exact time frame for a rate hike, in contrast to her speech last month when she said the Fed will accommodate one in the coming months. The U.S. Central Bank raised rates in December of last year after almost a decade of near-zero rates. Kim Min-ji, Arirang News.